Hello guys, and welcome to my YouTube channel once again. So in today's video I want to show you guys how you can analyze the market to get big moves, all right, to catch the big moves. So today we are going to be looking at the jump 100 index, and I am on the daily time frame. All right, so from the daily time frame, as you can see, the market has been bullish for some days. It's been buying, creating all these wicks that indicate higher highs and higher lows. Meanwhile, let me just quickly see if I can access the monthly time frame to see how, sorry, the weekly time frame is actually what I wanted to see. Okay, from the weekly time frame, you can see it's been a strong consolidation for some weeks now. For a very long time, the market has been consolidating on the weekly time frame. You can see, all right, the market has not been able to sell below this zone. All right, so the market is respecting this zone now. After last week candle closed bearish, this week's candle is trying to buy, until it closes. Then we say, okay, it actually bought or so. All right, did close bullish or not? So what we are seeing here is that the market is trying to buy back to this zone from the weekly time frame. That's what we can see. Excuse me. So the market wants to buy back to where it has been selling from, which is this high, this particular high here. All right, but we are not sure. We have to go down to a lower time frame, because even if this is going to happen, it might not take 1 week for the market to get here. You see, for this particular, let's see, when the market got to this zone, you see it took the market several weeks before it was able to buy back to this zone, then sold back. Then this one started buying again the first week, the second week, the third week before it got here. So now for the market to sell back to this zone, it might not be easy for the market to start buying till it gets to this zone. It might take more than 2 or 3 weeks before the market gets there. But during this time, you'll still be finding different opportunities. You can still find bearish opportunities to sell the market and also to buy. All right, so let's quickly go down to the daily time frame to see what we have here on daily time frame. So you can see the market is giving us a structure that looks like a double bottom. Can you see that? Looks like the first bottom and the second bottom. So it looks like the market is actually buying to get back to this zone where I would consider to be the neckline. I will consider this to be the neckline. All right, so that's what it looks like. The market wants to buy there, but the movement of the market actually looks like the market, it doesn't have enough energy, the strength to buy to this zone so easily, because looking at what we have here, you can see the market has been creating wicks. Excuse me. The market has been creating wicks. You can see the weak rejection here. It's another week. This candlestick, look at each of all the daily candlesticks have wicks. Now this wicks indicates weakness in the movement of the market, especially when we have if you go down to lower time frame, you will see that what we are having here are higher highs and higher lows, and the higher highs and higher lows are weak ones. They are the ones that they look weak, which indicates the market doesn't have enough strength to move compared to the movement of these bullish candlesticks here, which is impulsive. You can look at how many candlesticks we have from here: 1, 2, 3, 4, 5 candlesticks. Yet the market is not even up to this level. Meanwhile, just 2 candlesticks, the market is here. That indicates the market is actually weak. All right, so we have to go down to a lower time frame to still confirm the structure and the movement of the market better. So let's go down to the 4-hourly time frame. All right, so on the 4-hourly time frame, you can see what I told you. There is weakness in the market. The market cannot move easily, and you can see the impulsive sales in the market. The market sold impulsively from this zone down, then started buying again. She started buying too many bearish and bullish candlesticks. Market is still buying. All right, so from the look of things, the market might sell on getting to this zone here. On buying up to this level here, you might be seeing some nice sells. All right, we might be seeing some nice sells. But also looking at what we have here on the chart, we can easily draw a trend line, because if you try to zoom out, you will have something that you see, things that can make you feel the market is about to break out of a trend line, or to continue the bullish move, like what we have here. All right, so first of all, let me help make you guys understand this. When the market creates the first high, then it creates the second high. This is where your trend line would be, right? This is where your trend line, you want to put your trend line like this, to touch the first high and the second high. All right, then you try to watch out for what the market is going to do on the third touch on the trend line. You can see here the market broke through the trend line, came back and retested with this bearish candlestick, then but went above. Now on getting to the zone we marked there, you can see the market created another high. This time around you can just place this you can just bring the, let me not waste your time, you can just bring your trend line to mark the two recent highs. If you mark the two recent highs, this is what you're going to have. On the 4-hourly time frame, these are the two recent highs I would want us to consider. Then if you consider this, then you will see that market is yet to break out of a particular trend, which is this particular one right here. You see there's a trend here, and trust me, once market gets to this zone, there is bound to be some reaction, right? Then and you also see that what we have at this point looks like a very good looks like another block or a supply zone which the market would want to react to on getting there. And you see it is in line with the trend line. So we also have to look at the 1-hourly time frame too. Let's go to the 1-hourly time frame. Let's go to the 1-hourly time frame. All right, so you can see what we have here now. So we are expecting the market to buy to that particular trend line, although if you want to consider the recent two highs, you will have a trend that looks like this too. You have a trend touching this high here and this high here. You will see the market, and if we zoom in, let's zoom in and see. You see there's a breakout. It marks there was actually a breakout from this particular trend. There's a breakout from this particular trend. This thing I'm showing you is something you should always try to look out for, because there is how you can mark your trend lines, and you're not even, you might feel once the market breaks and retests, then the market is has successfully broken out of the trend. No, meanwhile there's another trend line above it, you know, because you did not notice. You see the market on getting it starts buying a little, then reverses back into the trend. All right, means you did not mark the trend line correctly. So take note of all this. You can see if the market broke out of this trend line, pulled back, then went above, retested this particular trend line again, and is buying. All right, so now, and also you can see what the market is doing. If we get a trend line, let me remove this one. All right, then let's get the trend line here again. Let's try to join these highs. If we join these highs here and we duplicate this one again to put it right here, let's say here, 2, all right. So you will see that the market has a long way to go. We are expecting the market to actually do what? To actually get to this particular zone. There should be a reaction here now, because you can see that this zone, which is a supply zone, is in line with this other trend line, which we want to see the market breaking out from. This is the main trend line we're looking out for. So if the market can successfully break out of this trend line, this particular trend line, which is in line with this particular structure, you can see the confluences, this particular trend line here and the supply zone and this other trend line here, they are all at the same point. So if the market is able to break above this zone, then we expect the market to come to this zone, maybe pull back for a retest, then go continues buying massively. Mind you, we are expecting some buys on the weekly time frame. We are expecting the market to buy. The same thing is applicable on the daily time frame. So if you can just take some sells at this point, because I expect the market to actually sell from this zone because of this structure we are having here. The market might, on getting to this zone, we are expecting some sells. The market might sell back to this level here, then starts buying again massively. All right, so you just have to watch out for the reaction of the market on getting to this zone. It gives you a confirmation it's going to sell. Then you enter some trades and make some good profits. Now, what are those confirmations you want to see? You want to see some kind of chart patterns that indicate a reversal. All right, you want to see maybe the head and shoulders pattern, maybe a double top, or you want to see some candlestick patterns or some rejections, market getting to this zone. So if you try to identify these things on the actual zone you are expecting the market to sell from, trust me, you'll be catching big moves, because if you enter it straight from this zone, then you are able to hold the trade down to this zone here. It's massive profits, guys. Mind you, this is the 1-hourly time frame. If you go down to the 15-minute time frame, you will know the market has a long way to go. All right, you make so much profit. Then also, let's say the market is able to break above this zone. Once the market is able to break above this zone, then maybe gets to here and retraces back to this point, you can enter a nice trade at this point and you make so much profit. Mind you, the target is where on the daily time frame we are expecting the market to get to this high here. All right. Meanwhile, this is actually the neckline which we expect the market to get to first. So the market will nicely get to the neckline, then to break above it, then you find an opportunity to continue the buys up to this zone here. So whatever you see happening here, do not think the market is really going to sell that long. If you're entering a sell, you can catch some big moves, sell trades, but do not forget that the market will be buying based on the structure we are seeing, which is this double bottom we are having right here. All right. So no matter what you do not forget what you saw on the higher time frame, because that's the overall direction of the market. All right. So that's it. It's very simple. You can be doing this with any pair every day. Just open a particular pair, or you just go through different go to the chart, go through different pairs. You'll find the one that's in line with your strategy. You'll find the one that is in line with this strategy if you are following this strategy. And trust me, this is a very powerful strategy. People have been making so much profit. People are testifying with this strategy. All right, it's very simple. It's very simple, except you don't just want to understand it, guys. All right, so you can do this on any kind of pay and it works so well. All right, so on the 15 minutes time frame, if you are a scalper, you don't just want to hold trades for a long time, you can just go to the 15 minutes time frame and be looking out for some buy and sell opportunities. Even while the market is like this, you can see we have like here when the market was buying, we had some lower highs and lower lows. Then you can just wait for a breakout like this one here. You can just pick some setups like this. All right, then wait for the market to break out. On market breaking out, you find your entry at that point and you trade a few candlesticks. You are in some deep profits, you are out of the market, you rest, wait for another opportunity, go to different pairs and do this, guys, if you are interested in just taking small money from the market. But if you want to hold long trades, you need to go to a higher time frame, then find your setups there on the higher time frame. Wait for the market to get to the zone you expect it to reverse. Do not be in a hurry. Once the market gets to the zone, do not enter a trade. Ensure you have seen some confirmations, the double tops and the double bottoms, the head and shoulders pattern, structures that indicate market is going to reverse. You have to train your eyes to be able to easily identify them. All right, set your stop loss once you enter a trade, and also set so that in case the market doesn't go again, doesn't go your way, you won't lose much, guys. All right, so it's very simple. Keep on practicing these things and I'll see you in my next video. Meanwhile, there's a link in the description of this video. It takes you to my Telegram channel. If you want to join my mentorship, my one-on-one mentorship, you'll find my direct contact in my Telegram channel. All right, stay blessed. Like this video, subscribe to this YouTube channel. Share your thoughts in the comment section. See you in my next video. Peace out.